Hi and welcome to this Blueberry Markets video update with me, John Kibler, Head Currency Analyst. In this video, we're going to be taking a look at gold again, and what I've done is stripped it all back to the beginnings, and I just want to take a look at how we could possibly trade this market. And the reason being is because we've had the FOMC statement and decision. It's rocked the boat a little bit. The dollar's bid at the minute. The dollar was selling off quite aggressively, and now it's bid again. It's in that range-bound environment. So how do we technically break down markets now? And what I really wanted to do was just strip it back, break it down from top to bottom. How do I see these markets, and how do I see them playing out? And essentially, what happened was, the market came up into these key resistance highs, okay, around about that 1350 level. It actually just dropped slightly short of that, and then we saw that serious sell-off on the weekly chart. Now, once you see these sell-offs, these aggressive sell-offs, you have to be mindful that you're going to see a little bit of a correction before continuation. Now, if we look at these sort of opens and closes, where the market is stalling at the minute, and what I'm going to do is just grab a trend line and just drop left. Okay, I'm just going to go left. I'm going to line it up. Okay, and what you can see is that the market is actually retesting this range bound area that we saw before. So the market was stuck between these 2 points. It ranged, it broke out, it continued quite significantly to the downside. What happened now is the market has moved significantly lower, and now it's just correcting back up into this point. Okay, so this is why I'm still expecting another break lower in gold, because we're just rejecting this key resistance level currently. Okay, so that's why I'm looking for that, and I'm just going to remove all these drawing tools again. So how do we take advantage of this? So I'm just going to jump to the daily chart. And this again confirms my bias of wanting to go short here, because the market formed a lower low. When the market typically does this, we see further downside. We don't know when, but we're going to be looking for that price action to suggest that we're going to see further downside. Now, what I see really on this daily time frame is this sort of wedge pattern forming, or this sort of channel rising. And what I am expecting is a breakout similar to what we saw over here. So let's just take into consideration that the market is bouncing from those key lows all the way over here. So what I'm going to do is I'm just going to drop that line in where we were kind of before. It was around about that 13 sort of 12 area. I'm just going to put a resistance up because, you know, we're looking for that short opportunity. That's sort of those lows in there. And we can see that the market is rejecting this area. We can make it a little bit neater and just go a little bit higher if we really want to. But I'm really looking for this market to take out that area, continue lower, and push all the way back down into this sort of 1250 area, okay, for gold, before seeing any kind of further upside. All right, so we've broken down the weekly chart. We understand that the market is at a resistance point. Okay, now we just need the market to give us opportunities to look for the short in the first place. Okay, so what I'm going to do is just drop down into the 4-hour time frame again, just break this down even further. Can we look for any kind of particular trading opportunities? Now, the safer one will be waiting for a break of that trend line support just in there. So what I'm going to do again, I'm just going to dive again into the 1-hour time frame and just look at what's going on. Now, what happened yesterday, we had this significant downside. Okay, now we had this significant downside. We could look for this to continue into the next day. And again, it comes into, you know, how, when, why, and, you know, what we're looking at here is the market coming into these previous structure points. Okay, so it's coming to these previous lows and to these previous lows here. So what we could see is the market break down further again today. And I know it's a Friday, so trying to trade on a Friday can be a little bit tricky. But, you know, we've got the potential opportunity here for a short setup going into next week, perhaps. Okay, so again, all I'm looking for is some kind of reason for the market to kind of go short. So we've got these channels sort of working their way through, or we've even got this sort of tighter channel setup if we go into the 30-minute time frame or lower. You can see that the market is at that resistance point. we've got this sort of channel forming. How do we take advantage of it? Okay, how do we get short? And for me, it's waiting for a break of this channel. Wait for the market to take it out, and then look for the continuation short opportunities. Now, the key low again comes in around this point. We had the market retest those structure highs. So what I really want to see is the market take out that low. That gives me opportunities to go short on that higher time frame, or in line with that higher time frame, giving us a nice big risk to reward before we even come down. You know, we're looking at targets of 1250. You know, look at the potential trade and opportunity we could have if gold does move within our higher time frame bias. Okay, so that's what we're going to go through today. I hope you enjoyed this breakdown of this video. Gold is a very popular commodity, so I wanted to break it down just a little bit further, give us that outlook. Why am I still looking for that continuation trade on gold? So it's been John Kibler, head currency analyst at Blueberry Markets. If you're watching here on YouTube, please like and subscribe. If you're watching here on TradingView, please give it a follow here and comment how would you trade this commodity.